So, you want to know the best stocks to buy. Can I introduce you to my friend, the S&P 500? When you invest into the stock market, you're making a bet that the money you're investing will grow in value over time. So for example, on Monday, you purchased one share of XYZ company for $100. Your hope is, in the future, the dollar value per share will increase in that company. So on Tuesday, if the dollar value per share increases to $107, then that's good. You just made an unrealized gain of $7. However, if the dollar value per share went down to $93, that's bad because you're operating now at an unrealized loss of $7. Please note that gains and losses in your stock investments are not realized until you sell your share of that company. Now, that's a fairly simple concept of making money in the stock market. For seasoned investors, it takes years of study and observation for them to feel comfortable to whether pass on a stock or buy into it. For new investors like myself and yourself, we run the risk, a very high risk, of netting huge losses until we find the right company to invest into. This is especially true if you're new to finance or not sure what you should be looking for in a company to invest into it. Investing into random companies or investing into a company because you like them but not really understanding their financial situation is kind of like playing fire. Eventually, and in the stock market, more likely, you're going to get burned. So when you're new to the stock market, it's best to kind of just play it safe. Test the waters. Acclimate yourself to the volatilities of the stock market. A safe first stock for new investors to invest into, in my eyes, would be the S&P 500. At this point, you're probably asking yourself, what in tarnation is the S&P 500? Good question. It's an aggregate of the top 500 companies in the United States. That means you got companies like Apple, Microsoft, Amazon, Facebook, Alphabet, Berkshire and Hathaway, Tesla. They're all in there, this S&P 500 index. Do I deem it safe? Because it's a great way to automatically diversify your investment portfolio, hedge your bets, and slowly grows your money to hundreds, if not hundreds of thousands of dollars over a long period of time. Wait a minute, why do I want to diversify my investment portfolio? Because remember, investing your money into the stock market is like taking a gamble. You're gambling that your money you invest into the stock market is going to increase in value rather than decrease. So for example, let's say you take all your money and invest into things like McDonald's and Burger King. Those are two companies within the restaurant industry. So if all your money is only in restaurant stocks and then something like the coronavirus comes in, wipes out the industry and closes everything down for like a year plus, well then you know you're going to be losing an absorbent amount of cash. So in case all your bets in the restaurant industry go bad, hopefully you got some cash stored away in other industries that can help cushion your losses or offset them. Okay, so I haven't lost you yet, right? Because what I just explained is what investors call hedging their bets. Hedging is an investing method used to limit your exposure to risk by betting on the opposite side of your original wager. So for another example, let's say we have a chicken stock and then a pig stock, and that they are inversely related, meaning when people buy chicken, they aren't buying pork, and vice versa. In our example, it might be smart to invest in both stocks, because if people are buying the chicken stock and not the pork stock, then your pork stock is going down. But the losses from the pig stock are being offset by the gains in the chicken stock. This is why the S&P 500 appeals to me as a young investor, because I know I'm getting some of that top chicken and pig stock, and also at the same time I'm getting a little bit of that pork and turkey stock as well. So basically, investing into the S&P 500 is a good way to decrease the amount of risk you're exposing yourself to when you invest into the stock market. The S&P 500 really eliminates the guessing game of which company you want to invest into, automatically diversifies your investment portfolio, and has great potential to increase your potential for more unrealized gains. I see this stock like betting on America. As long as the United States continues to stand and stay standing, well then the S&P 500 will be fine. And if our country were to fall, then we will have way more to worry about than our losses in the stock market. So this is my own personal views on the stock market. It's an incredibly wacky place to be and very hard to predict and understand. I implore you, encourage you, to do your own research and talk to your own people in order to make stock market decisions for yourself that best benefit you. In this video, I just hope that I create a small baseline of knowledge for you to start being able to ask your own questions and conduct your own research about them to satisfy your own needs within the stock market. I may be wrong, and if I am, then you just try to adapt, move on, and try to learn and understand what happened. That's it for this video. If you enjoyed this video, don't forget to leave a like, comment, and subscribe down below. Until the next video, I'll see you guys then. See ya. Boom.